Everybody. Welcome to pre-market analysis. It's Monday, March 16th. As always, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, and hope everybody had a nice weekend. Let's get into economic data. Monday, what do we have on the board for today? Empire State Manufacturing Index is out right now. And we have some Canadian numbers coming out as well. We are getting a little push to the upside in pre-market, which is good. I don't see anything else on the dockets for today. Tomorrow looks like a clean slate as well. Wednesday, I think we start getting some numbers coming in. PPI month over month at 7:30 on Wednesday. What else do we have here? We have crude inventory, oil inventory sales. There'll be some focus on that, obviously, right now. And we have some FOMC speak happening at 1 o'clock and a statement at 1 o'clock. So there'll be some action there. And then, obviously, at 1:30 when the conference is. So we'll find out what's going to be said during there. So Wednesday, a big day on Wednesday, as usual, whenever the Fed speaks. After Wednesday, Thursday, we have unemployment claims, and then I don't see anything else. I think NVIDIA has their GPU conference. I think that's this week as well. So I think the focus will be on NVIDIA as well. So let's get into let's focus on the VIX like we've been starting lately. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. And in the description below, find the link for Discord. Come and join us for live trading from 9:30 a.m. to 11 a.m. Eastern time. If you take a look at the VIX, we've got a little gap down here, which is good. So it's showing, it's a direct opposite of what's happening with the broader markets and the Qs and the SPY. So we have a little gap down here. So, you have to be wary about that potentially filling. So if you do get some downside today on the or get some upside rather on the VIX, that would mean that you're potentially going to be getting some downside on the equities and futures market. So I would watch this level, $27.19 on the VIX. Maybe you fill that gap on the upside there, and then hopefully you come back down here and start to simmer down. And ideally, we want to get the VIX down below this 20-day SMA at $22.30, and then for things to get back into balance, you want to get down below this 200-day SMA, this 200-day moving average down to $17.55. So we're still all elevated a little bit above the 20, above the 50, above the 200, obviously. So, however, it's coming down a little bit, but things are still geopolitically still a little volatile, so still got to pay attention to that. So let's take a look at the ES and. Yes, like I said, we are getting some pre-market push. Came down, and we're still holding this 65.8175 level, which is July's monthly high. And we did regain August 2025 monthly high at 66.39 and a quarter. This point of control level from March 9th. You can see now it's starting to reject here. So we lost that level. At first we needed to come down and fill it. We did fill it. Tried to regain it on Friday, and now we lost it. We lost it on Friday, probably after the first 45 minutes of trade. And then you can see now we're coming back up. Break and retest, classic break and retest. So watch this 67.0170 level. You need to get above that level in order to continue to push higher. If you do, then I think you could probably push towards Friday's high, sitting at 67.3756. In order for us to really get some good volume pushing higher, I'd like to see us regain the 67, 61.95 level. Then I think you can really push back into those January monthly lows at 68.14 and a half before you really get some resistance up there. On the downside, got to hold the 66.39 and a quarter. If you lose that level, then I think 65.8175 could be your target on the downside there. Below that, you have the 64.90, which is September of 2025 monthly low. That's pretty much it. So we are below these daily moving averages here. You can see the 20 is still sitting up here at 68.20, 68.28 and change. And then you have the 100 at 68, 90, 81, and 50. The 50-day moving average at 69.0190. And then, so we are still below those moving averages there. So you can see we are still in a downtrend here. You know, how do you know you're in a downtrend? You have, you know, here's your high, you have a lower high, and your low, you got a lower low, lower high, lower low, and you got a lower high, and your lower low. And now we'll see what happens today. If you can regain Friday's high, maybe you break this downtrend, right? That's the first thing you're going to be looking at right now. You need to regain this 6740 level, and then maybe you can break this downward trend, right? Okay, let's get into the SPY. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, hit that bell so you can get future notification. Go down in the description and find the Discord link so you can come and see some live trading from 9:30 a.m. to 11 a.m. Eastern time, where we go over some live trades of trading Tesla options, and we answer questions and all different types of Q&A, and we go over basic trades along with some other advanced trades. So the SPY is going to be a mirror image of the ES, right? You can see these, like I was just going over here. You have your highs, you have your lower highs, and you have your lows. You have your lower lows, right? Here are your highs, our lower highs, and then your lower lows, right? Still trending downward, right? So now today's big day, same thing. Must regain this 672.38, break this downward trend, then you could start pushing higher. If you do break this low here, which is pre-market here, you still have some downward 661.36. If you break that level, then there's still some more downside. However, be aware you have that 200-day moving average at 658.60 down there. So there's some support down here. Pay attention to those levels down there. Again, we are still below these moving averages here. The 20 is sitting up at 681.43. The 100 is at 682.34, and then the 50 is 686.38. So there's still quite a bit of room on the upside there to, you know, potentially get some movement up there, and before you can get some resistance. So if you do break through this high from Friday, I think you definitely can start moving higher and get into these moving averages, right, before you start getting some real resistance there, right? So let's get into the NASDAQ now. NASDAQ has been holding its own, I think, compared to the rest of the markets here. So the NASDAQ right now, the NASDAQ is going to be the same thing. You know, we're going to have to get above this high here from Friday, 24,805.25. If you can get above that high and then get above this regressional trend line here that I have here from October 30th of last year, you can get into that. You know, we're real close to that 20-day moving average of 24,983.71. So I like this. If we can get above this 20-day moving average and hold, I like us to start pushing higher. We can get into this price level I have here at 25,152.25. It is it's a channel level that I've had here. And I don't know what date I went back to starting that channel level, but if we regain that, then you can push into this 50-day moving average of 25,285.15. And so then, I think your first line in the sand here, you got to regain Friday's highs, right? Because it's the same thing. You are stair-stepping lower, but it's not so aggressive. It seems like it may start to consolidate a little bit here, but we still have to respect the lower highs and the lower lows, even though they're not significant. Still lower high, right? And here's your low, lower low, right? Here's your high, still a lower high, and you're still at a lower low, right? So if you can regain this high from Friday, you break that price structure going downward, right? So watch that high, 24,805.25. If you break that, I think possibly you break that downward structure, you know, that downward slide that we've been having right now. However, if you do lose this July high of 24,300, more downsides coming. The next level of support I have is 24,153.50. That's there on the downside. I've already gone over your upsides right here. Your first level, if you regain Friday's highs, I'd like us to potentially push into this 20-day SMA. And then if we can get some good thrust over that 20-day, I think that we can start pushing higher then and get into your 50-day moving averages at 25,285.04. So if you take a look at the Qs are going to be pretty similar as far as channeling down here. It's just going to be the same exact thing here. This point of control level I left up here, that's filled. It actually it has some pretty good confluence with Friday's high here. So 603.65 is going to be your line in the sand for today. If you could push through it, we break our downward slide of our lower highs, right? And then the same thing on the downside though. If you lose this downside to 592.13, you're going lower. However, we do have, you know, some decent support down here. You have the 200-day moving average of 591. And then below that, you have 590.36, which is a October of 2025 monthly low. Below that, I don't have much support until down here at 583.32, which is August of 2025 monthly high. That would actually, if you did lose this 200-day, I think that's a pretty decent level of support between this 580.74 and 583.32 on the slide down there. But we are getting some good push to the upside right now. So let's watch this level here. 603.65 will be a pretty important level for today. So let's get into Tesla. Before we get into Tesla, again, subscribe to the channel if you're new. Hit that thumbs up button, like this video, and hit the bell so you can get future notifications for future videos. And then down in the description, join our Discord community for live trading. Same thing here. I have this 420-cent level here. If you can get above this, which is Friday's high, so it's the same thing. You're stair stepping lower, right? Your lower highs with your lower lows, right? It's showing you're channeling lower. Same thing. If we regain this 420, we push into the 20-day SMA sitting at 404.83. I like that level. And it will break this structure of this downward trend here. Also, what I like here is this straight downward selling that came into play here. You know, I talk about this all the time. When you have one straight upward move, it creates a speed zone for the downside, right? Well, the same thing happens the other direction, right? So now we create a nice little speed zone here. So if we can get above, obviously, Friday's highs at 420 cents, and then this 401.03, I think we could quickly move into the 20-day SMA before you get a little resistance up there in that supply area. On the downside, though, I think that, let's expand this a little bit here. Thing that concerns me on the downside a little bit. So let's look at this. I'm going to show a little noisier of a platform here because this is my trading screen. So we did hit this open point of control from the 9th that I had open here, right? So those of you that are new, I have these point of control levels that I keep open. So this point of control right here from March 9th, I left this open, meaning that, so this is showing where the average price is an automatic script on my charts, where it shows where the heavy volume was, and it plots a yellow line, which shows me that's where the most volume came into play during that day. So now, after the market closes, it has to come down and touch this level. And when I say has to, this is what the data that I've put together over the course of the years, that it comes down and it uses this level as support. So the point of control is below the price action, it then becomes a level of support. So I want the market to come down, hit it, bounce, and turn back around. If it does not hit it, I leave this level down here and I leave it open for a level of support. So it doesn't necessarily hit it the same day, but it will come back down and hit it at some point. So you could see this was open on March 9th, and then you could see over the weekend it hit 4 days later, and we hit and we bounced right off it. So now this is a decent level. I'm going to now change this point of control, and sometimes I take it off, but a lot of times if I see that it bounced really well, I'll just put the word filled there, knowing that this is now a filled point of control. So if I'm in the market at this time, so this is my trading chart, right? So that's why it looks a little noisy. But if we come back down here and I'm short, I'll know that, okay, well, this is a good level. I could probably be getting out of my shorts, or if I'm not in the market, possibly be taking along for it to be going on the upside. However, that being said, we still have some open point controls down here, right? So just like this open point of control from March 9th, took us 4 days to come back down and hit it. You know, just because it takes a long time doesn't mean it's a dead level, right? So I leave these levels up for a long time. I had a point of control level that was open last year, and it took 9 months to come and hit it. It was a $416 level, and Tesla pulled back all the way, I think, below 200. And then 9 months later, it came back and hit that point of control at 416, right? So unfortunately, we have an open point of control level based on one of my strategies at 365.90. And then below that, unfortunately, we have one open here at 333.78, right? Does that mean that it's going to go down there? No, not necessarily. However, I'd leave those levels open. So if we do start to pierce through this veil here at 382.78 and we lose it, there's a good chance we're going to come back down and we're going to hit these point of control levels, right? On the positive side, that being said, we have open point of control levels. This one was filled for 34.71. But we have an open one at 455.07, and then it gets a little noisy. You can't see it, but I know it. There's one up here at 478. Okay, so that's the upside. That's a positive that we still have some, point controls that are open on the upside. As far as today, you can see we are holding this 200-day moving average, sitting at 393.53 today. And we are above this 200-day exponential moving average at 395.85. So that's going to be a good line in the sand today. You want to hold that level, right? And just like I said earlier today, if you can get above this Friday's high, then I think you could push into this 20-day SMA at 404.83 at some point. Maybe not today, but at some point this week. So, hopefully we can continue to get this push higher. And then this, if we can get above Friday's high, this becomes a nice little speed zone. We could push higher into this 20-day moving average 404.83, and then above that you have a weekly low at 407.29, which I would anticipate you're going to get a little resistance in that supply zone area up there. So pay attention to your levels when you're trading. Take a screenshot of these levels, put them on your board, put them on your charts. These levels are pretty good. They bounce, during the day. They're not perfect, so these levels are only guidelines, and you have to do your own homework and, before you make your trade. So this is all educational purposes, just so you know. There's nothing 100%. Anybody tells you have the 100% trading strategy, I would run as fast as I could as fast as I can to the door. So that being said, let's take a look at what we are going to do for our trading our trading strike price today. So I'm going to start out, you can start out with, like I said, they have 3 weekly expiration dates now. So they have Monday, Wednesday, and Friday. So there is an expiration date for today. So you could, if I were to start out with today's expiration date, I would start out in the money calls at 395. And I would start out with in the money puts at actually the puts would not be in the money at 395, but that's what I would start out with. You could start out with, and this is where they closed. So this is expiration date today. So the calls at 395, they closed at $2.97. So now we are above the close from Friday, right? So we closed at 391, I believe. Yeah, 391.20 we closed. So we're about $4 higher. So this premium price here at $2.97, it will open up probably in the high 3s, maybe in the low 4s, because we are $4 higher, right? And then this premium price here on the puts, which is a 395 put, this will probably open up, I would say, probably in the 3s, maybe in the 4s, probably right around the same premium price as the call price is going to open up. So you're going to have to watch that, okay? But I may just go to Wednesday's expiration and buy myself a little more time, expand the call price $10. So I'll have a 405 call price, which will expire on Wednesday. So I'll buy a little more theta, a little more time on my premium. So it'll be volatile on the open, just like all strike prices will, but it'll settle down once the market, after the first 10 or 15 minutes. And then I'm going to have a 385 puts. So basically I'm buying time and I'm expanding the price, right? So the price is going to be about $10 on the downside, giving myself room, and $10 out of the money on the downside for the puts, $10 out of the money on the call side, right? So 405 on the call side and 405 on the put side. So the premium prices, because we are opening up a little higher, this should open up, I would say probably close to the $3, maybe probably close to it, right? And then this will probably open up probably close to the same. So it's probably going to be a similar opening on the premium prices for both of those. So, but we'll take a look and see how those work. If we take a look at the 5-minute opening range trade, which what we normally do, this is what Friday looked like. Friday was a pretty nice day if you stayed into it. So here was your Friday range: 396.59 for the low, 420 cents for the high. So you had a $4 range. You finally got some good movement at about 935, and then once you broke it, so once you broke the downside there, where did we get the low there? We had 396, and then down there, so $4. So you could have gotten about $2 out of your premium on a Friday. Fridays I typically like to be done, fairly early. You don't want to spend a lot of time on a Friday, ruin your weekend. and you want to, watch out for the, for the wicks that happen. You're looking for a nice solid candle, when you're trading options. The wicks, they make your premium prices, they fluctuate too quickly, and then especially as you get closer for expiration, they devalue very quickly, no matter if you're on the put or the call side. But you can see, towards the end of the day, if you saw your downside, if you just stayed short most of the day, you could have gotten a nice little run out of your downside here, right? You could have kept just every push you got to the upside, just sell your puts based on your levels here. It respected these levels. That's why I say write down these levels that I have up here. These levels are, I haven't changed these levels this morning. I just turned on my computer and poof, these levels are here. So what I will do occasionally, I will look at some of these levels and I'll see how they're performing. Then sometimes I'll remove them. Like for example, this February of 2025 monthly high, I'm going to see how that's performing. So that's a 394 high. So it's still okay. It's not a bad level. You can see how it's respecting itself right here. Came down here. So I'm going to leave that up here for today, see how that holds up. I really love this 395.85 level. You could see how it was being respected during the trading day, all day on Friday. Once we broke through it, it came back up, could not get through it. Look at this. Just beautiful, beautiful rejections, right? And now today we're above it. So you could use this as the market opens as a level of support. And then if we lose it, you're out of your trade, right? But this could be a good level. We are piercing above the Bollinger right now, but you have to see when the market opens because, as I said, look at these candles. Some of these candles look big, but look down here. There's no volume here compared to these candles, right? You can find a candle that would look the same size in the pre-market versus the regular market, but there's no volume, right? So don't pay attention to the size of the candle. This is where your eyes need to be to validate your price action, right? Always watch your volume and pay attention to that will give you the confirmation on your price action here with these candles. So don't be misled about the animation of the size of the candle. Watch your volume and know when you get above these levels here, this yellow line here, it shows you average volume. And when you get that purge, that's showing you big volume is coming in on those levels here. So anyways, that's going to be about it for today. So again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. Drop some comments down below if there's other equities you want me to cover. Again, I will only cover equities that have earnings and that have liquidity in it. I do not cover any penny stocks. Go down to the description area, find that link for Discord so you can come and join us for live trading from 9:30 a.m. to 11 a.m. Eastern time. Hope to see you there. If I don't see you there, I will see everybody tomorrow for pre-market. Have a great trading day. Talk to you soon.